All right, I'm going to just keep it clear right from the start. We're in a bull market. We're in an uptrending market. And until we see a breakdown beneath 564 on the SPY, until that number gets crossed and then we open and close a candle beneath that number, I want you to realize that Stocks with Josh is going long on this market. Even though prices are lofty, there's fears and FUD afoot. The fact is the market's trending up, and that's the number one thing that every trader needs to assess the minute they go to put money to work on Wall Street. They need to know whether or not they're trading the trend. And I find yet again the people that are jumping in way too early to inverse ETFs and counter trend moves. They're trying to guess that reversal. They're trying to guess the inverse V that the markets might potentially be setting up for, and they're getting ahead of the train. Who's the captain of the train? The Fed Jay Powell. And yes, he just began to basically ease up the brake so that the train could begin to pick up speed. So we were going too fast. And so Fed Powell applied the brake by raising interest rates. Now we began to slow down a bit. So he then has eased up on the brake so that the train can begin to pick up more speed. And so that is not necessarily pointing to an absolute breakdown. The only time the markets are going to break down is when people think that he's got it wrong or that he's reacted too slowly. And on that note, we've got a ton of Feds who are now going to be talking this week. Fed Jerome Powell is going to talk this week. We also have the dissenter who had said that they should not have given a 50 basis point cut, only a 25 basis point. She's going to be talking this week, as well as at least 3 other Feds are going to be talking this week. And what the market wants to figure out by listening to all of them is what is the chance of getting another 50 basis point cut in November 8th at the next FOMC meeting. But I don't think that that's necessarily the news that's going to drive the markets this week. What's going to drive the markets this week is 2 data points that are coming out at the end of the week. The first one is going to be the GDP. That tells us whether the economy is strong. It tells us how fast is this economy train moving down the tracks right now. Is it slowing down more than anybody thought? And so the Fed needs to ease on the brakes some more, or is it actually moving pretty quickly? That's what we're going to find out on Thursday. And then on Friday, we get the PCE, which we know to be another inflation gauge. It's actually the Fed's preferred inflation gauge. And that's going to tell us whether or not the Fed can afford to ease and lighten up on the brake and let the economy rip and get hot again. Because if inflation is actually rising, well, then that's going to cause some fear. It means he's going to have to go back and apply that brake and be more hawkish. So the perfect scenario would be a growing GDP and a shrinking inflation. That would be a true Goldilocks moment. And I believe that the SPY and big tech would absolutely rip. So what are we seeing so far in the market this Monday? Well, we saw mostly a choppy sideways market. Why is that? Because we already had a pop up. We've jumped up above an area, that 564, which had been serving as resistance for quite a while. We've jumped up above it. Now we're in breakout zone. Now we're in bull price discovery zone. But the volume isn't going to flood back in, and the momentum and acceleration isn't going to flood back in. Buyer exhaustion could be on the table until we get that potential data and would rally all the bulls again. It would basically get them moving fast. So we've got to wait until Thursday and Friday. Now, I mentioned this in my last video that Micron is also reporting earnings this week, as well as Costco. And I think these two are potentially going to set up to be potentially decent lotto plays to the upside. Costco is a bit expensive. Micron has been beat down, but both of them have reasons to go higher right now. It's going to come down to whether or not they deliver positive earnings, and you're going to get updates on that in the Stocks with Josh ChartGoat University Discord. I did not see today a good trade alert for the 3K to 10K challenge, but I am sure that this week is going to deliver us a good opportunity. I'm watching the charts very carefully for either that breakdown on the SPY or that break up. But what I did alert early in the morning was 2 opportunities. I said that Micron was heating up and likely would hit the target of $95. Well, it did that. And I also alerted that the MACD was pointing up in a breakout mode for Tesla and that we were likely going to jump from 240 to 248.90. and it did that. So both of those were good plays if you jumped in on them. And I'm going to be breaking down Tesla because it's time to talk about Tesla again, because it has really been on the move. And the last time that we got close to the Robotaxi Day event that Elon had planned, this thing jumped $100. And what happens is the moment it cooled off and slowed down, FUD just flooded back in, and everybody started saying it was going to break down back beneath $100, which I have been consistently telling you is crazy talk, because this is a company that is positioned to potentially be one of the biggest companies in the world based on some of the ideas that are being developed internally. Autonomous driving is absolutely going to be the future for all driving. And these guys have the biggest and best system and setup so far. And the fact is, we're just needing to find out how far along are they. Because if Wall Street likes what he says on the 10th, I'm going to tell you, I'm going to take you into that chart. I'm going to tell you exactly where the stock price would go, and it would shock you guys. Now, the other thing I'm going to point out, 3 patterns on Tesla today we're going to look at, because not all of them are bullish, but not all of them are bearish. But what is happening on the Tesla price is that we have been in price compression really since 2021. Since the 2021 high, we've been slowly making a series of lower highs, but we then have begun to push from the bottom up. We've begun to make a series of higher lows, and these lines are getting ready to cross, and we're getting ready to cross on a potentially huge catalyst in an environment where, this being a rate-sensitive stock, easing monetary policy could put them back on a hard winning streak. And based on good news, it could really break out right now. So it's time to be looking at what you're going to do with Tesla. Now, some of you have already come tardy to the party, but there's still opportunity. What I don't want is for you to begin to think about getting into Tesla when it jumps another $10 or $20. And so I'm going to lay out the important lines in the sand for you today. This is the Stocks with Josh show. Thank you for joining me. Thank you for dropping a heart in the comments section. Hit the like and subscribe to get the next video, to get the next hot play, to get the next technical analysis that I provide on these markets. Let me remind you guys that I am coming to the Chicagoland area. I'm going to be at Stock Up with Larry Jones event that he's got scheduled for October 12th. If you're not using the charts, you are flying blind. You cannot get into a car unless it's a autonomous robotaxi Tesla car. You can't get in and drive blindfolded. A lot of you that haven't taken the time to learn the charts have been doing that, and I'm going to be doing a great course on that over at Larry's event called Music and Money. There's going to be a link in the top pinned comment. Don't sleep on that. Okay, let's quickly talk about the Tesla chart. Let's jump into that right now. Okay, the first thing we have to acknowledge is that Tesla has been on a very long decline ever since 2021. And the bears love to point out that it's made a series of lower highs ever since then. And that right now we are potentially coming up against this resistance line again, where they would tell you that Tesla is going to get pushed down again because the company is just overvalued and overpriced. Have heightened awareness too that we are coming up against this historic resistance line, and that since 2021, Tesla's not been able to get above it, and it is a huge problem. But here's the good news. If Tesla does get above it, and right now I would tell you that the price is right around 256, if we get above this and we actually break this historic line, it's going to wake up all of the bulls and all of the investors, because it really opens up a much bigger move to 2 different levels, and I'm going to give them to you right now. The first level here is 310. The second level is right here, which would get us all the way to 380. Now, you would say, Josh, is there any other confluence or anything else that would agree with those targets? Let me go over that with you. So we have, in addition to that historic descending line of resistance that we are now potentially pushing up closer to, let's identify that even though we've had that line, we've also been making a series of higher lows, each one after the other. And so we have pressure pushing the stock to the upside, as well as pressure pushing it to the downside. And that's where we've gotten a lot of price compression in this area, but we're getting ready to see a breakout. Now, in this area, if you come and you look at this a little bit closer, you see that we have potentially a cup and handle that has formed, right? This is the base of the cup, and here's the handle. and the neckline is right around this 254. Now, the way these work is if the neckline gets broken, and that is defined by a candle, a weekly candle that would open and close above the neckline being 254, you then take the base of the move to the neckline, and this gives you an expected move higher. And what would that expected move higher be? Well, it would be a return back to this 380. This is where this would go if it confirmed bullish and we got a weekly candle to open and close above that 254, which would also simultaneously be a breakout above this descending line of resistance. Now, is it all bullish and is everything good? Well, nope. Let me slow down and just remind you of the risks that are in the trade. We've got a couple that we need to be keeping an eye on. One, this pattern here is bearish. This ascending channel, if it fails to get above that 254, these typically break to the downside. And so we could, if we fail and we break and open up a candle back beneath 240, that would be pointing me to a move back to $140 and possibly below. And so that's why you see I've got a little stop loss here at 240, because at this point in this move, we should not be coming back beneath 240. And so 240 is an area of stop loss consideration. It could be an area where we get a flash crash test before making the final break up. So you need to be very clear about the type of decision you want to make. You might not take a touch on the daily time frame. You might be looking for a higher time frame or one or two candles to open beneath 240 as the decision point for taking profit. So here's the number one takeaway. At bare minimum, I think we have to come up and test this 260 to 258. All right. And so what that presents us is an opportunity. Basically, I'm communicating that Tesla is still moving up powerfully, and the likelihood with the catalyst event October 10th ahead of us is that we could easily hit that target by then. And then if the market loves what Elon's saying, you heard it from me today, when this thing begins to break out, if we can close some candles above those important necklines and descending lines of resistance, my target for Tesla still potentially this year could be a $380 Tesla stock price. So that would be such a banger. So I know that would be just great. I'm not predicting it. I'm telling you that that's what my prediction will be if we get those candles which confirm that move. Guys, that wraps it up for me today. Thank you for joining me. Thank you for dropping hearts and just saying hi in the comment. Each and every one of you is appreciated. I'll try to respond to some of the comments after I post this video. And don't sleep on the Stocks with Josh Discord, ChartGoat University. You can actually trade with me and my crowned traders, which are doing an incredibly good job. You can follow along in the 3K to 10K challenge. Don't miss it. If you have not been consistently winning and growing your small account, well, then stop doing it alone. Come do it with me, the Crown Traders, and I'm teaching charting in that Discord. I'm going to be dropping another class this week. I've got friends visiting me, Keenan, Stock Up with Larry Jones. We're all together here in Hawaii, but I will be taking time for you guys as well. Appreciate each and every one of you. Peace and blessings. Take care.